Okay, welcome everyone, and good afternoon. Good morning to those who are joining us on the West Coast. We thank you all for joining Perspectives on Philanthropy 2021, Giving USA and Today's Philanthropic Landscape. My name is Eric Javier. I'm a principal and managing director of CCS Fundraising, and we're just delighted that so many people are joining us today. Leading up to today's session, we had almost 3,000 registrants for this webinar. So we're just thrilled that so many nonprofit leaders and practitioners, board members, and philanthropists have joined us for this important session. So, rooted in a nearly 75-year history, CCS is an international fundraising consulting firm that provides focus to empowering and advancing the philanthropic efforts of nonprofit organizations across all sectors. As a firm, we're proud to partner with more than 500 organizations annually throughout the world. We are so pleased to convene this discussion today in partnership with the Indiana University Lilly Family School of Philanthropy. We thank Dr. Una Osili, Dr. Anna Pruitt, and the rest of the Lilly Family School for their dedication to the nonprofit sector through research and education. As many of you know, the release of Giving USA 2021 has been closely guarded and much anticipated. The report embargo was lifted this morning at 9 a.m. Eastern Time, meaning that all of you on this webinar are among the first in the country to receive this information. We're so honored to be joined by a distinguished panel of leaders who will offer their firsthand reactions to the report. I'll introduce the panelists later on in our session. But we look forward to the discussion on the current state of philanthropy during this extraordinary time that we are living in. And what an extraordinary time it has been. In 2020, we have all lived through an unprecedented health crisis and pandemic. We've been dealing with remarkable economic impacts because of that pandemic. We've seen racial and social justice movements. So 2020 has been truly an unprecedented year. And I know I'm excited to get Una's and the panel's take and perspective on really what we've seen and what it means for philanthropy both today and in the future. As we begin, I would like to encourage everyone to submit any questions for the presenters via the Q&A box in your attendee control panel. We'll be sure to follow up regarding any questions not addressed during today's session. So at this time, I would like to introduce our keynote speaker, Dr. Una Osili. Dr. Osili is the Associate Dean for Research and International Programs at Indiana University Lilly Family School of Philanthropy, the world's first school dedicated to increasing the understanding of philanthropy and improving its practice worldwide. Dr. Osili is an economist with significant experience in research and policy in the fields of household behavior and economic policy. Along with her team, she leads the research and publication of Giving USA, the annual report on American philanthropy. She has served as a member of several national and international advisory groups, including the African Development Bank, Social Science Research Council, United Nations Economic Commission for Africa, and the United Nations Development Program. She earned her BA in economics at Harvard University and her MA and PhD in economics from Northwestern University. Dr. Osili has been a great friend of CCS and the firm for many, many years now. And so I'm delighted to turn it over to Dr. Osili.
Welcome, everyone. It is really an honor and a joy to be with all of you. Even though it's virtual, we are truly excited to share the results of Giving USA 2021, the annual report on philanthropy. I'd like to start by thanking our colleagues at CCS for hosting us today and for their wonderful partnership on this report and so many other initiatives in the sector. I'd also like to thank all of my colleagues from the Giving USA Foundation and at the Lilly Family School who make this report possible, and all of you who have joined us today to dive into today's most, I'd say, exceptional set of findings and results. Later on, we will hear from a very distinguished panel, and you'll have a chance to send in your questions. And throughout this presentation, I'd like to encourage all of you to use the Q&A function, especially to share your questions, your comments, and any ideas you might have for future research. I'd like to start by just presenting the big picture. There is so much in this year's report to unpack, but first, a little bit about Giving USA. Some of you already know that Giving USA is the longest running research report on charitable giving in the United States, dates back to 1955. And we at the Lilly Family School have been partnering on this report for more than 2 decades. So on the next slide, you will actually see a little bit about this big picture set of findings. Every year, we anticipate these results. In fact, when we launched Giving USA, we've been working on it for 12 months. But this year, we have set a new record for charitable giving. 2020 was a year of extraordinary generosity, unprecedented health and economic challenges, racial and social justice movement, as you've heard, but also incredible innovation and resilience from the nonprofit sector. This $471.44 billion is a new record, but we must place this into context by noting that it was a set of very unusual circumstances that allowed Americans to give on a level that we have never seen before. And where did all the giving go? Here we have some new findings as well to report. By far the biggest recipient of these charitable dollars remain the religious subsector with 28% of giving. But just to put this in perspective again, if we were to look at this data in the 1950s, the 60s, and even the 1970s, we would find that 2/3 of all charitable dollars went to religious congregations. So there has been significant change over time. In addition, the education sector, human services, and also the public society benefits subsector were important destinations of charitable dollars in 2020. Now, that is looking at where all the giving went in 2020. Let's also look by donor type, who gave the bulk of these contributions. And there we can also put the $471 billion in context. So here we have some new records being set. I want to emphasize that individual giving still remains the lion's share of American philanthropy, meaning when we think about American philanthropy, $471.44 billion makes the US one of the largest, certainly the largest, and most comprehensive nonprofit sector anywhere in the world. There are more than 1.3 million nonprofits that receive these contributions, but American households of all backgrounds contribute generously to make up this $471.44 billion. This year in 2020, I want to point out some very unique findings. First, the share of giving that's attributed to foundations reached a new record at over $88 billion, 19% of all giving. That is a high watermark. We have not had a level like that since the history of Giving USA. Charitable bequests also increased and now make up 9% of charitable giving. Corporate giving is still, you could say, relatively stable at 4% of all charitable dollars. And that 4% includes gifts made by corporate foundations. So if I were to tie all of this information together, what we often emphasize is that despite the role that foundations played in 2020, we also have to emphasize that if we add individual giving, about half of the foundation segment and the charitable bequest segment, we would find that still 88%, 87% of all giving can be attributed to individuals, both living individuals and deceased. And still the message remains, philanthropy, it represents the power of individuals, individuals of all backgrounds, individuals of all different ages, race and ethnicities, and income groups. And we'll be able to talk more about that as we continue. So this is the big picture, a new record set in philanthropy, but also in very unprecedented circumstances in response to a pandemic that we have not seen before. At least we'd have to go back 100 years, certainly not in our lifetimes, and a racial and social justice movement that was unusual in its breadth and depth, and also not just in the United States, but around the world. We also emphasize that a lot of the effects of the pandemic continue to be felt, although vaccines are becoming widely available, and we are starting to turn the corner in many communities in the United States. Parts of the world are still being impacted. So that's the big picture set of findings. Now I'd like to take you behind the scenes. As Eric mentioned, you are in a very unique group of individuals because you're part of this launch, the first day of the launch. And we're going to actually present to you the top 10 findings. Every year, our research team, led by Dr. Anna Pruitt and the rest of the team, sit down together. This year, we did it virtually, and we sift through all the findings. This is actually a lot of arm wrestling within our team, and we come up with a list of the top 10, the most important takeaways. There's certainly other findings in the report that merit attention, but in the interest of time, we are just going to focus on those top 10 and invite you to all at the end of it to send in your reactions, maybe something else we should add that we may have forgotten to. So let's get started. We're going to start with the very first finding, and that is that giving reached a new record in 2020. This is really important to note in terms of percentages. Total giving increased by 5.1% measured in current dollars, and adjusted for inflation increased by 3.8%. One of the things we've tried to do is look back at how giving performed during periods of economic recession or downturns. What we've emphasized is that you've seen one recession, you've seen one recession. In other words, we've had giving perform well in economic downturns, and that was certainly the case in 2020. One reason for that, and we'll see more as we continue, is that financial markets ended the year on a very strong note, and we know that giving is highly associated with financial markets, as well as the economic recovery that started to take place towards the end of the year, boosted in part by the actions of the federal government with the CARES Act specifically tailored towards American households and businesses. So that is the top finding. In fact, if you don't remember anything from the presentation today, I hope you do remember this new record set, but in the middle of very challenging circumstances. So we cannot necessarily emphasize that number without putting that in proper context. Now let's go to the second finding. Just as important is to put why we had this new level of generosity and how and why donors stepped up. To understand the giving environment in 2020, I'd like to take us back to what took place throughout the year. Specifically, if you dial back just a few months, the COVID pandemic started in the United States in March with the shutdown of many parts of the economy. In the summer of 2020, the United States and many parts of the world experienced a racial and social justice movement that lifted up issues of racial equity and social justice, and many of those issues continue to receive attention from policymakers and the philanthropic sector. And finally, in communities around the world, as well as in the United States, there was unprecedented level of economic need. There are many ways to look at this. If we just take some indicators, the GDP numbers by quarter, we would see that in the second quarter, we had one of the most significant economic contractions on record. Unemployment that has not been on a level that has not been seen since the US started tracking unemployment. And many of those conditions continue to persist, leading to levels of food insecurity, housing insecurity, and many other areas that we can spend time on. But by the end of the year, it's worth emphasizing that we started to see a strong, although uneven recovery. Not all American households were able to regain employment and restore their consumption, but the actions of the federal government, specifically the PPP dollars, the dollars that went to cities and states, and also the stimulus checks that went to American households, helped many households to start to rebound towards the end of the year. And importantly, we had distinct trends in financial markets, with the S&P growing by 6.3%. In fact, that was one of the best years since 2013 for financial markets. So big takeaway, the giving environment in 2020 was complex. It was uneven, but by the end of the year, there was a strong recovery that allowed a lot of households who tend to make giving decisions in the last quarter of the year to give. And there was also a tremendous need, and households, as we know, give when they have the resources, the financial and economic resources, but also when they see that their giving can have an impact. So there is a lot to unpack in 2020, but I think for many of us in the philanthropic sector, it was a year that really showed Americans stepping up to meet the needs of their neighbors, their communities, and we saw foundations as well respond to this very unusual and unprecedented environment. The third finding, and this is also one that we want to spend some time on, is that 3 of the 4 sources of giving grew in 2020. I already mentioned the growth rate for overall for giving, the 5.1% adjusted for inflation. Giving grew by 3.8%. On the part of individual giving, it's also worth mentioning that although last year was a challenging year, where we saw the biggest growth was with the foundation and bequest segment of giving. The simple explanation for that is that foundations tend to give out of their assets, and with financial markets performing quite favorably, foundations were able to step up and respond to needs in their community. Corporate giving, in contrast, tends to be more linked to the overall economy, specifically the decline in GDP and decline in corporate profits overall in 2020 had an impact on corporate giving. Giving by foundations is also worth spending some time on. Giving by foundations increased by 17% in current dollars to an estimated $88.55 billion, and adjusted for inflation, it rose at 15.6%. And that, as I mentioned, was in fact a new record set for foundation giving. Now, as we look at these sources of giving, it's worth emphasizing that corporate giving deserves some close attention. On the next slide, we do spend some time on corporate giving. Can we have the next slide, please? I think we can move to the next slide for corporate giving. Specifically, when we emphasize overall, what we see is that giving has grown over the past 20 or 30 years. And in the years that we've seen decline, we've tried to emphasize what was taking place. To give you that perspective of what the track record has been overall for charitable giving, we've coded the recessionary years in yellow. And the reason for that is to show that each recession has impacted giving differently. We've had recessions where giving didn't change very much. We've also had the Great Recession, most of us can remember, where giving declined by double-digit rates, and it took 6 to 7 years for giving to recover. It's worth emphasizing that 2020 was a different type of recession, specifically while we had the contraction in GDP and the contraction in corporate profits. we did have an appreciation in the stock market, and that had a very strong impact on foundation giving and also giving by high net worth households who tend to give out of their wealth and not necessarily their income. I see that there are a lot of questions coming in, and I'm certainly looking forward to that segment where we start to take questions. But now let's look at the next slide, where we do have the opportunity to understand, taken together, what the economic environment was in 2020. So just to summarize, we had the S&P growing by 16.3%, GDP declining by 2.3% in current dollars, and personal disposable income growing. An unusual set of circumstances put together. Why are we emphasizing the role of the economy? When we start to look ahead at 2021 and beyond, one of the drivers of the charitable sector and the ability of many charities across the United States to rebound is going to be how the economy functions. The economic environment not just affects charitable giving, but also affects the demand for charitable services and the work that nonprofits do every day. Now, moving to the next slide. We have been asked this over and over again. How do we explain the results in 2020? If I had to pick one variable, it would be the role that the stock market played. And over time, we've seen that the stock market has a significant impact. It's closely linked with charitable giving, but we tend to think of giving as a lagging indicator, meaning the stock market has to recover first in order for giving to rebound. So once again, as we look ahead, not just at 2020, but in the years to come, we're also going to continue to look at how the stock market will affect giving decisions, because individuals give not just out of their income, but also out of their financial resources and their wealth. Moving to the next slide. This is another area where we can call out changes over time. If I had to issue one call to action out of today's presentation, it would be, what can all of us do to continue to build an atmosphere of a commitment to generosity, a commitment to charitable giving in the United States? And one measure that has been used, not necessarily just by us at the Lilly Family School, but by others, is to look at the share of charitable giving in the overall gross domestic product. So giving as a share of GDP. What we've noticed over the years is, although giving has grown, the economy has grown, and giving has stayed relatively flat at 2%. Well, in 2020, we did have a shift up, with giving moving beyond where that 2% that it's been stuck at over time, and even declined during the Great Recession. However, what made that increase in giving as a share of GDP possible was the unprecedented circumstances of 2020. In particular, here we had a decline in GDP while Americans stepped up in their generosity. On the next slide, we're going to go to the fourth finding. So now that we've talked about the economy and we've talked about the different types of giving, it's worth emphasizing which areas of giving grew the most and which ones grew more slowly. We note that individual giving grew, but not as rapidly as giving by foundations. Foundations were able to give because they had the resources, and in particular, as we mentioned, the very strong performance of financial markets in 2020 and the incredible need in many communities allowed foundations to step up, reaching 19% of total giving. In contrast, on the next slide, I want to show one area of giving that continues to be one that we watch, and that is the role of individuals. Prior to the pandemic, we had seen the overall giving rate declining. This was certainly a challenge in terms of the number of American households that were participating in charitable giving. We call this the participation rate. In 2020, we did have some evidence that more Americans are participating, are giving, are expanding in terms of their generosity. However, whether that trend will continue will depend on the work of the charitable sector overall to continue to engage donors, build trust, and build relationships. We also know that even before the pandemic, although participation in giving was declining, the average dollar amount held steady and had even grown slightly. And we call this donors down, but dollars up or holding steady. So this is a question going forward. Will the generosity that we've seen in 2020 continue in 2021 and beyond? And a lot of that will depend on the overall economic environment, but also on the actions of the nonprofits and fundraisers and all those who work closely with donors to continue to engage, inspire, and build relationships with donors to sustain and maintain generosity at the levels that we saw in 2020 and even before that. One question that our team has been asked quite a bit during this pandemic is what is surprising about the results we've seen in 2020? To put the individual giving results in perspective, we've shown the trends over time of giving by individuals. And it's worth noting that in general, individual giving tends to grow during favorable economic times and contract during periods of economic downturns. And specifically during the Great Recession, we saw a decline in individual giving, and it did take, as I said, 6 to 7 years for individual giving to recover. When it comes to other segments of giving, on the next slide, we have also tracked not just overall giving as a share of GDP, but individual giving as a share of household disposable income. And here the results actually align very nicely with what we discussed earlier. Individual giving as a share of disposable income has also stayed relatively stable at 2% of GDP. We did see it tick upwards during the economic expansion of the 1990s and 2000s, but then it has declined since the Great Recession and has taken quite a bit of time to bounce back. Now, during the past period, the 2020 period, we once again saw that percentage increase, but the extent to which those trends will continue will depend on many factors. And once again, we have to emphasize a very unusual environment with 2020 in particular. Many households were not necessarily in a position to give. They faced unemployment, furloughs, the job loss, and so forth. But a sizable segment of the American population was able to work from home. Many of those households accumulated savings. They saw that some of their discretionary spending went down, and they saw tremendous need in their communities, which they were able to respond to. So as we look at individual giving, this is another place where there's a call to action for all of us in the philanthropic sector, as well as board members, donors, and other stakeholders. What would we have to do going forward to continue to inspire Americans of all different backgrounds to continue to give, as the evidence suggests they did in 2020? Now, moving to the next slide, we are going to look at one segment of giving that perhaps did not perform as strongly. This was an area that I think several questions have already emerged. Why wasn't corporate giving as strong as some of the other segments of the charitable sector? Well, there are a few factors to lift up, two in particular. The role that the overall economy plays in corporate giving. GDP declined in 2020, as did corporate pre-tax profits. And we also know that the economic impact of the pandemic was uneven across industries, with some parts of the corporate segments performing quite strongly, specifically the tech sector, while the service sector and many other parts of the corporate landscape actually saw declines and contractions. Now, many of you in the audience may say, well, we did see very strong corporate responses to the pandemic and the racial and social justice movement. And I would agree, especially when you look at the announcements, the media coverage, and the social media advocacy that many corporations participated in. But many of those announcements were multi-year pledges, not all in 2020. And a lot of the announcements went beyond charitable giving to 501c3s and included impact investments, relationships with vendors, CSR commitments, and many other facets of corporate social responsibility that were not necessarily corporate philanthropy. So we have just gone through the top 5 takeaways from Giving USA. We've been able to cover individual giving, foundation giving, corporate giving. Now we're going to turn our attention for the next findings to look at the destination of charitable dollars, and in particular, where we saw significant growth in the past year. It's worth noting that there is a really broad-based takeaway in terms of growth. Giving to 7 of the 9 subsectors in 2020 grew, and 5 of those subsectors, giving grew by more than 8%. We also know, if we look at the 2-year growth rate, which is particularly important for many organizations, we see positive growth for all 9 subsectors. One area that really stands out in terms of a record and an increase, we had the public society benefit subsector appreciating in 2020, as did human services. We also saw giving to the environment as another strong area in 2020. Now let's look more deeply at each of these subsectors. Let's start with human services. Throughout the United States, as the COVID pandemic unfolded, human service organizations were in a very unique position. They were on the front lines of addressing food insecurity, domestic violence, housing issues, and many other basic needs that were necessary and relevant during the pandemic. So it is not surprising that we saw that giving to human services grew 9.7% in current dollars. And we have seen this pattern in other recessions where during periods of economic downturn, many Americans step up their giving to support those in need. But we also must emphasize the innovation and resilience in the human service sector, where many organizations had to find new ways to serve their communities. Usually they had to find volunteers and serve, in some cases, provide services even virtually, and also respond to a crisis that was unfolding in real time and had no clear start and end point. So I think we must not just emphasize the growth that took place in 2020, but the resilience, the innovation, and the collaboration that made the results possible in 2020. Now, turning our attention to the next slide. In addition to focusing on areas that experience growth, we must also dig a little bit deeper to understand which subsectors, which parts of the charitable sector experience declines and why. We did see in 2020 that giving to arts and culture and humanities declined by 7.5%. A lot of the explanation was related to the pandemic. The shutdowns affected many arts organizations, impacted their in-person fundraising events, their ability to generate earned income, but also to engage with their supporters. We know from previous recessions that arts and culture organizations tend to be more impacted by economic downturns as donors shift dollars into other areas. But during the pandemic, arts and culture organizations were hit not just with declines in fundraising, but also in earned income with museums, orchestras, performing arts centers, and many other facets of the arts and culture landscape being impacted by the effects of the pandemic. Turning our attention to the next slide, and this is a good point to start to wrap up, but also start to think about what lies ahead. What is going to take place in 2021 and beyond? In 2020, we saw an unprecedented set of challenges, an economic crisis, a racial and social justice movement, but also many charities pivoting to move their services online, their fundraising online, and their ability to build community online. Going forward, the question remains, how will charities continue to serve their communities? Will this be in a hybrid format? How will the online and the in-person continue to play a role? But one of the things that we've seen that is a constant in 2020 and beyond is that individuals, Americans of all different backgrounds, generosity is a core value, and many individuals in 2020 and beyond want to give to organizations where they have a commitment to serve their communities, we also saw that non-traditional forms of giving played a significant role in responding to the crisis of COVID-19 and the racial and social justice movement. In particular, crowdfunding, mutual aid, and neighborhood groups, grassroots organizations responding to the crisis. I think we saw communities step up as well, and new questions being raised about how nonprofits can bring community voices to the table. And finally, several reports from the field, including work done at the Lilly Family School of Philanthropy, suggest that in 2020, there were new donors that came to many organizations. Many organizations saw an expansion in generosity, with many more stakeholders, volunteers, and advocates joining their fold. As we look ahead, nonprofits of all different types and sizes have an unprecedented opportunity to continue to build relationships, to build community, and to lift up issues of equity and inclusion as they seek to impact the field and make a difference in the work and serve and advance the missions that they serve. So with that, the very last finding is one that I think all of you will continue to pay close attention to. Over the past decade or so, we've seen online giving grow, sometimes in double-digit terms year over year. However, for the past 2 decades, online giving has stayed at below 10% of overall giving. In 2020, we started to see a shift in that percentage. Online giving now occupies a larger slice of the pie. It is 13% of overall giving based on data provided by the Blackbaud Institute as well as the Giving USA report. And what this means is that increasingly online giving of all different types are now, those forms of giving are here to stay. And again, a challenge for all of us is how do we start to think about engaging donors, building relationships, and reducing the barriers to give online for nonprofits of all different types and in all different areas of the charitable sector. So just to end today's presentation, I think this is a finding that all of us will continue to watch. As I mentioned, online giving has hovered below 10% of overall giving. We've seen that number increase in 2020, and now we all have an opportunity to rebuild in our communities, but also as we seek to make a difference in the work that we do, how do we bring the ease of giving, the convenience of giving, but merge that with the trust, the relationships, and the sense of community that come from in-person engagement in order to continue to build a healthy, a thriving, and impactful charitable sector. So I think now that I've presented the top 10 findings, it's now up to all of you to please send in your questions, your comments, what was surprising, what trends did we not mention that we should actually have included in this top 10 list. I think we have a brief moment to answer 1 or 2 questions before we turn it over to our panel. Again, thank you to all of you for joining. I look forward to the panel discussion and also to hearing from all of you in terms of what you found most interesting about this year's report.
Una, thank you so much. One quick question that we saw pop up a lot during the presentation, and I know you get this almost every year, and it's around donor advised funds and where that information is categorized. Do you want to take 30 seconds to explain where people can see that in the data and some of the trends?
Absolutely. So the simple answer is that when we think about donor advised funds, they reside in different parts of the charitable sector. So specifically, when we talk about the national donor advised funds, Fidelity, Schwab, Vanguard, those tend to be classified under the public society benefit, which we did see an increase in 2020. However, the donor advised fund world is complex. And we also count donor advised funds under the single issue charity umbrella. I'll give you an example. Many colleges and universities have donor advised funds. And when we count those would be under education. as an example. And then finally, community foundations have hosted donor advised funds for about a century, really. And so those would be counted under community foundations.
Wonderful. Thanks, Una. Wonderful information as always. I think for many of the fundraisers, the practitioners on the call, seeing philanthropy reach a new record, I think is, I'm sure, validating and maybe even a little encouraging for the sector. So Una, we'll let you take a breath, but you're not going to go anywhere. I want to now move to the panel. There's just so much to talk about. And for those on the webinar, you can see the full bios of all of our panelists, really an all-star group. We're so grateful for their participation. Wanted to welcome Eileen Heisman, who's President and CEO of the National Philanthropic Trust. I'm pleased to welcome Stacy Palmer, who is the editor of the Chronicle of Philanthropy. It's been the top editor since the Chronicle was founded in 1988, and I think everyone on the call appreciates our newspaper of record and all the great work, Stacy, that you and your team do. And I'm pleased to welcome Dr. Anna Pruitt, who is really the lead and the captain of this amazing report. So we welcome everybody. And I just want to begin, maybe Eileen, if I could start with you, just some general reactions to the report, these findings that were just released, some of, maybe your top takeaway or sort of surprising reaction to what we've heard. Eileen, you've got to unmute.
Great. Am I here? Am I audible?
You're here.
Good. I was thinking there was going to be more dramatic swings. Having lived through the pandemic, I think a lot of folks were predicting much more disastrous results for fundraising, and a lot of charities were going to be going out of business. And I saw a lot of very frozen kind of folks in the development arena, and I'm a fundraiser by training, kind of just not knowing what to do. So I was really delighted to see that it had gone up. And I do agree with Una that the stock market definitely contributed to it. I was not surprised to see foundation funding go up because with the Ford Foundation and the bonds that got borrowed against in some of the bigger foundations, and also the incredible commitment from the council and foundations and their membership. So I wasn't surprised at that, but I do think that we somewhat dodged a bullet, and I think the trend of going up is going to make the recovery easier than it was in 2008. And I'm glad to see that Americans are still being generous, but I think there's still a lot to learn from this, and I think we're going to be thinking about the data for a long time.
Thank you, Eileen. Stacy, you and the Chronicle have been just so good about covering many different angles in the sector during the pandemic. Very curious about your top line reactions to the data.
Well, first of all, I want to congratulate all the people who are on this call, because you all as fundraisers had such a tough year and did such amazing work. That these results happened is because of incredible efforts by so many people in the nonprofit world. So take a moment to take a breath and a pause and celebrate, because these are astounding. So many organizations I know turned to the data from the Great Recession and just assumed that the absolute worst was going to happen. And for some organizations, it did, unfortunately. I mean, the results are uneven. And so while overall we look at these numbers and have lots of reasons to be excited, some groups definitely suffered in various ways for various reasons, but still it is remarkable. And, Una, during her presentation, made several times, she said, this is a call to action. And it truly is, because all of those new donors, people who were sitting at home and thinking about community and missing the friends, the things they cared about. Look at those lines outside of museums we've seen lately. People miss the things that nonprofits do, whether it's the direct services. We all saw the support for food banks, and clearly people knew that there's urgent need, but it's also all of the other things that contribute to our quality of life that people realized was very important to them. And I think now is the moment to tap into that as fast as possible, as continuously as possible. So while I said take a breath for a second, I also want to say action is going to be incredibly important as well. And if you need some support for that fundraising effort, some of you may have seen Mackenzie Scott made an amazing set of yet another round of multi-million-dollar gifts to organizations. And she cited the work that nonprofits do. And she made a call to her fellow donors to say, nonprofits are working tirelessly and they need support. Don't think that my gifts can do enough. But she really talked about the urgent needs in communities and the way nonprofits are responding. So it's a wonderful testimonial that I think all of you can use.
Stacy, thank you. Anna, there's probably no one who is closer to this data than you. So same question, but from the perspective of a researcher, someone who looks at this so closely year in and year out, what was most striking to you?
One of the things that was most striking to me in this incredibly unusual year, we've used the term unprecedented more times than I can count because there's no other way to describe the events of 2020. But one of the things that I keep coming back to is the factors that we know impact charitable giving continue to impact charitable giving. So the health and strength of the economy is a major factor. In addition, we see things like legislation, things like the CARES Act that can come in and have an impact. And then finally, people responding to these unprecedented events, people wanting to give to COVID-19 relief, and people wanting to support the movement for racial justice. Those are the kinds of things that we know impact charitable giving, and we see that borne out in the results from giving this year. And some of the things that I think people are saying, well, that's a bit of a surprise. We know that those are still linked to factors that we can look to and say, look, GDP actually went down in 2020, as Una pointed out. And one of the things that we have to acknowledge is giving by corporations is closely linked to GDP and to pre-tax profits, two factors that did in fact decrease. And the things that are driven by the stock market, those are the areas of giving that we saw increase. So even though we had this highly unusual year, we can still see that the factors and the relationships that Giving USA data is able to show in relationship over 40 years continue to be closely tied.
Great, thank you, Anna. So we just talked briefly about just some general reactions and surprises. I want to move to sort of a second theme of our conversation and to dig more deeply on the 2020 climate and its specific impact on giving. As we've mentioned now a couple times, we've had the pandemic, racial and social justice movements, economic stress, but as Una pointed out, a real unevenness to the economic impacts on society. Stacy, maybe if I could start with you. You know, the Chronicle recently did a study, on the groups who received money from the wave of racial reckoning and this real interest, and rightly so, on social justice. What was the outcome of that study? And do you have thoughts to share with those who are on the call today on how you would recommend organizations can help their donors become more proactive than just reactionary, given what's happened over the last year?
Yeah, and we're still exploring a lot of the data. And I think Una and Anna probably know how tricky it is to really be able to say, where did the money go and what truly happened to it? So one of the things that we tried to look at were some of the success stories of how the money had been spent, especially that went to smaller organizations. So, we saw tiny groups that, saw their budgets increase 10 and 20 times over what they ever thought they were going to be able to get. And for some of them, they were able to take a pause and to say, wait a minute, what do we really want to do on a big scale that's going to make a difference? And so, if those kinds of organizations can expand in an amazing way, these are not the household name kinds of groups, but smaller groups that are making a difference. One of the groups we looked at, for example, is educating really young children about racism so that we don't have these patterns persisting later in life. and got tons of corporate support. You know, those kinds of things, those groups don't normally get those kinds of things. So those are the incredible success stories. But what we also saw was a lot of money went to still very big organizations. So it's still challenging for the scrappiest of organizations to get that money. Foundations, corporations still like to give to the big organizations, the household names that they know. So this explosion in crowdfunding that we saw, and all of those other things that Una mentioned, that's where some of these tinier groups got a lot of support from. So as those kinds of things multiply, I think that will be very important. And that's why you'll see, you know, an increase in digital giving and in employee giving and other kinds of things. So I think we are seeing a shift, but there's going to need to be a lot of work to cement it.
Thank you, Stacy. Eileen, you know, Una mentioned one of the stats that has been a multi-year trend, right? Is the donors down, dollars up, or at least flat trend. You know, thinking very much about your work at the trust. The giving from high net worth individuals in many instances has expanded. For some, as it has exploded. So I'm curious from your perspective, how behaviors in giving by high net worth individuals have evolved or changed over the past year, given the climate. Do you see more people looking to donor advised funds and other vehicles, more people becoming sort of more sophisticated? I'm curious the impact and the trends on the high net worth donor from your vantage point.
I think there has been an enormous accumulation of wealth since the recovery in 2008, which I think was uneven, and how it affected the different groups of people in the United States and their income levels. I think that with the tax law changes in 2017, that amplified that. And this stat out there, I mean, that 20 million fewer households have been giving than did 10 years ago, but the amount of giving has gone up. So we know that we've lost middle-class givers. The CARES Act helped that. I mean, I think the universal deduction would be to be able to deduct any gift, no matter what your income is. But I think there was a lot of accumulated wealth in the business community, and I think that people that either were high-tech people or there's certain parts of the financial services world certainly earned income that allowed them to make very large charitable gifts. I participate from time to time in seminars on fundraising, and this whole thing about chasing major gifts in the last 5 years has become the theme, because going after $100, $250 gifts, people are still knowing that they have to do that, but the major gifts seem to really kind of rule, you know, where a lot of the very successful fundraising organizations are working, hospitals, universities, you know, and you see them. I mean, I read the Chronicle, you know, and those highlights, and you think, how could these people, you know, accumulated this kind of wealth to give it away? They are using donor advised funds. They're also really generously giving out. I mean, there's certainly, in a down market, we have about 50% of our gifts are appreciated securities and 50 are cash. In an up market, it's about 67% are appreciated securities. So people that are participating in the stock market, when the market is up, are giving a large amount to donor advised funds. I think we need to find a way to re-engage the people, the 20 million households, in whatever way to get back to giving. And I also think that millennials, as they're growing into their, you know, a better earning years, you know, to actually get them involved. I also think there's a lot of things that don't get counted in this report. I mean, the crowdfunding doesn't get counted, impact investment, the mutual aid, giving directly to individuals or inside religious institutions. So I think there's money that's moving around, helping people, that's not counted. But the ultra high net worth and the high net worth are certainly generously giving, but I think there's a bigger issue, a zoom out issue, which is how do we re-engage those 20 million? And I think annual gifts, modest ones, they can feed a bequest program. You know, those are really important people. And so I know there's a lot of new donors that have contributed during the pandemic. And I think it's going to be incumbent on the development teams that are out there to figure out how to keep them engaged, to make the case, because, you know, they're ripe for staying, but you have to really work at it.
Yeah, thank you, Eileen. A number of my clients personally, and I know for us at CCS, I've been thinking really deeply about this idea of engagement, really up and down the entire donor ladder. We have more and more organizations we're working with who are contemplating or have hired digital giving officers, for example, not just a major gifts officer or a principal gifts officer, which we know really important, Eileen, as you mentioned, that's where the biggest dollars are. You need that revenue. But how do you engage smaller dollar donors? And it's interesting to pair that reality with, Una, that spike in online giving. I wonder, Una or Anna, both of you could maybe unpack a little bit that area, the online giving, right? So you would think that it would really help the volume challenge that we've seen, the decline in the number of donors. In any of the data, do we see that trend reversing or slowing? Do we see online giving? Is there any data that suggests that it is more demographically aligned with younger donors, or do you see it across all ages? Could you just comment on that? That would be really helpful for the group.
Yes, I'm glad you raised that point because we have been thinking about this challenge as well. How do we build a more inclusive philanthropic sector? How do we engage younger donors of all different income levels and also a more diverse group of donors? And the good news here is that giving through online channels, social media, fundraising, and crowdfunding tend to attract a younger donor base, a more diverse donor base, and also a more non-traditional donor base. So what do I mean by that? When we look at charitable giving overall, that tends to skew towards higher income, wealthier, and also more religiously affiliated individuals. But in contrast, giving through social media and crowdfunding platforms tend to have younger donors who aren't necessarily religiously affiliated, or they don't attend services frequently. And they also come from all types of backgrounds, from a race and ethnicity standpoint. And so I think here is really the opportunity, especially now that many organizations have the infrastructure to engage with their audiences through digital means that includes small nonprofits, but also large nonprofits. One of the very prominent examples during the pandemic was the CDC Foundation, where they raised over $50 million in a few months through a new platform called charity.com, a crowdfunding platform. So I think there's a tremendous opportunity here. It's not without obstacles. Clearly, the infrastructure matters, and building relationships with donors online does require intentionality. Anna has also, I'm sure, been watching those trends. I'm sure she has some thoughts as well.
I think Una has done a great job of talking about our research at the school. And I would just add that one of the things that, yes, I think we're all watching is, will all of these new donors who are giving online continue to do so? One of the interesting things that we see in some other reports around the field is that online giving is now the most common way for people to give. So that doesn't mean by dollar amount. By dollar amount, of course, it's always going to be, large gifts are not coming through online platforms. However, it is now the most widespread, and that looks like it will continue to be true, especially when we have people giving to unprecedented events like the pandemic and the movement for racial justice. We know that this is a really accessible and quick way to give. We also see increasingly that people are making donations on their phones. So we know that that's always also going to grow over time. And when I think about people making those decisions, I think of the immediacy of having my phone in my hand. I care about this. I want to make that decision right now. And I think that that's something that's quite powerful, actually, to have that immediacy, the fact that people want to help and they have an opportunity to do so in a relatively frictionless way.
Yes, Stacy, I'm curious if in any of your, reporting and your own surveys and studies have seen any trends of note on these new digital strategies, online giving, some of these innovations that everyone has already mentioned. Anything that you wanted to highlight from your own work?
Yes, well, fundraisers need to understand TikTok. and Clubhouse and all of these new forms of things. One of our reporters asked a teenager in the COP family for help in how to figure out how to navigate it to write a story about TikTok. But there are all of these new things that are engaging people, and we really need to keep our eye on them and how to, some of them are for engagement, some of them will be for direct giving, but there are enormous opportunities to expand that kind of giving. And, you know, I want to add a point on the inclusion. It's not just online that allows that, but, you know, certainly the Racial Reckoning made sure that fundraising offices around the country really focused on how are we raising money, who are we raising it from, how are we thinking about that? And truly that is what will expand charitable giving in so many ways, is to think differently about, you know, how do we pitch things for ages? You know, we've been talking about how women give differently, for example, and we've seen the power of how they give, but, you know, not every fundraising office is even adjusted in terms of that, let alone thinking about how to think about people of color. I'm glad to see that this conversation is happening, but we need much, much more of it, because that's what's going to lift giving in a true way, is to make sure that we're tapping more people. You know, 14% of millionaires are people of color, and how many organizations are tapping into them, for example. So we really need a sort of transformation that way. So I hope that's another part that will continue in the year ahead.
Eileen, do you want to pick up on that? Forms of engagement, innovations, things that you've seen or would suggest for engaging these different groups, especially I think under represented groups, both by color, but also by age, things from your own work that you would want to highlight?
I think that you need to find some kind of influencers or leaders from those areas, depending upon what your organization's about. Involve them on the board advisory committees, have small events where they can invite other people or identify you know, some kind of advisory group, or even more formal in some governance role, and just keep at it. It's important to have your staffs reflect that as well. And so the people on your staff should be representing the diverse kind of donors you want to cultivate. You know, I think fundraisers have to be a lot more flexible and agile than ever before. I mean, when I got into the field, you know, even videos weren't being used yet. So now, you know, you have paper, you have video, you have digital, you have crowdfunding, you have, you know, Twitter. I mean, you have to be a jack of all trades or have really talented pockets of expertise, because you need to know what the donors want to do and then go to them on their terms, right? So if you put me in charge of digital fundraising, you'd be in a lot of trouble. But you need to get people who are really talented in that area. And then going back to what Stacy just said, you have to know, you know, one of the things about old-fashioned direct mail is you could tell who was responding to what piece of mail because everything was coded, right? You have to know if people gave at a certain time of day because you pushed a message out, and that was, and any kind of demographic, what was the age of that person? What did they give to? What was in that message? Did you have a split test? I mean, all the principles of how you ask need to be applied to the digital stuff, or else you don't know what's pulling people in. And so this sense of urgency with social media is amazing, but if it's just a big clump of data, you don't really know what's moving the donor to give. I mean, I teach a course in philanthropy and fundraising at Penn, and my question to the students in the very first class is, what gets a donor from doing nothing to doing something? What is it you can do to get the donor to pull out their phone, write a check, which hardly anybody does anymore, pull out their stock portfolio? What is it that you can do to motivate a donor to do it? And if you don't have the data of what's motivated donors already, it's really hard to know the best and highest use of your time. So I just think that a lot of fundraising is a study in psychology of how people behave and why they behave that way. And fundraisers need to kind of understand it. And you can't do it without the data, but I'm not sure that it's as sophisticated now as it might be. But I know I bring somebody in to speak at my class who's a whiz at this. And every year when she speaks, she has a different presentation, and the data analytics that she figures out how to draw it down from are remarkable. So there are ways to do it, but you have to do it with a lot of intentionality.
Great, thanks, Eileen. So we've talked about general reactions to the recent report. We've spent a couple of minutes now on the climate and its different impacts. I want to turn to a third and sort of final section of our conversation, which is really around perspectives on reemergence and planning for the future. We have many dedicated practitioners on the line. We're always worried about that next quarterly goal or annual goal or budget, or the new building that has to be built, the new program that needs to be launched. So, there's always hard work ahead. So I want to start by just asking, given all that's happened, given this virtual world, Eileen, we joked about this in some of our prep calls. Here we are on a Zoom setting. I have a lot of clients who have actually talked about Zoom as such a silver lining in terms of reaching donors, having more conversations. It's of course different, but there have been advantages. So my question for everyone is, what trends or innovations do we think will really stick into the future, even as we get to some new sense of normalcy? And what are the things that we think are more temporary? Maybe Stacy, if I could maybe start with you.
Well, I think we've all learned that you can reach so many more donors through events on Zoom, for example. So a lot of people have been talking about the democratization in a way of even, gift solicitation of all kinds. It used to be, only major donors might get access to a lecture by some wonderful person on a campus or at a hospital. Now you can stream it and everybody has a chance to get it. And that's bringing out some donors who you might not have known about before, people with the capacity to give. Those are the things I think will stay, and I hope will. But then there's probably going to be this emergence of what people are calling hybrid events, where you do things where there's some streaming and then there's a chance to get together in various ways. We did a feature yesterday on the Houston Ballet, and a successful effort that it had to have, mini dinners in people's homes. People were comfortable doing that. They could be out in the backyard. They could watch the dancers perform in a streamed event. And it raised a lot of money. People felt comfortable about it. People could come back to socialize. The challenge with these hybrid events, though, exciting and wonderful as they are, is they're expensive, because you've got all of the costs of organizing these things, and sort of what we all know that there was the savings on virtual events, and there's more that needs to go to it. But I think that's the direction we'll see much more of. And I think if we can expand access so more people can participate, maybe that is the key to getting more of these donors who we've lost over time, is to be able to make those things happen. So I hope nonprofit boards are willing to invest in that experimentation, because it is going to be expensive. It's going to be risky to do it. But I think that's what we're going to see more of. People do want to come together. They want to come together among their charitable causes. We need to find ways to make sure that they do that. So whether it's an in-person or not, I think there still needs to be a focus on that.
Eileen?
I think, this is going to be an interesting transition. I think there's a lot of people that are craving human contact, and the minute they can get back invited to see somebody in person, they are going to. Does that mean that every solicitation has to be in person? No, I think, for I was a major gift and plan giving person mostly when I was working in hospital philanthropy. And I think there's a lot of that kind of effort that it's going to be very much still in person. But I think there's going to be some things that the Zoom and or Teams, whatever you're using, is going to be okay. The issue is that it's hard to co-produce both side by side. When you have a person, when you're in person with somebody and then you have somebody on a screen, I mean, it's very difficult. So, I think donors are going to have to almost self-identify about which one they like. The fundraisers are going to have to adapt to it. You're going to have to read body language and figure it out. But I think the jury's going to be out for a while. I think the digital, obviously most digital efforts are remote, but I've been at big events where they say, take out your phone and we're going to raise money for this, and people there in person making digital gifts. So, there's that hybrid of people being in person and also using digital. So I think we're, necessity is the mother of invention. I think we're going to see, what did we learn from being all digital, and how can we borrow from that, but also take advantage of all the wisdom we have from years of in-person fundraising. So I'm not going to predict, but I think we're going to see both. And I think we're going to see a lot more online transmission of money. I think the writing of checks is going to be fading. And so it'll be interesting to see, and I know there's fees attached and people don't often understand that, but it'll be interesting to see if that it disincentivizes or reduces the rate in which charities, earn all their earned income. But I think we're going to see more and more and more digital and less, less check writing. And I think baby boomers, of which I am one, I think we're seeing it now already. I mean, people didn't want to touch things, right? So they didn't want to write a check because they didn't want to send it in. So, that forced us to do things differently. I do think that fundraisers are really creative. I think they're really resourceful. I think they're not afraid of ideas. And I think one of the things I love about the field is people aren't afraid or embarrassed about trading the best things that they learned. So when you go to a really good fundraising conference, people are really open about talking about what worked and didn't work. So we're a really great communal sharing group of people. So I'm hoping that whatever we're learning, we're going to be sharing in the ways in which we talk to each other.
Great, thanks, Eileen. Una, you just shared, I'll actually direct this to both you and Anna. You just shared the data from 2020. So this is an unfair question in some ways. What in the data tells you about what's going to happen in the future, right? I think we're already well into 2021, but based on your analysis, what does the balance of 2021 look like? And then again, from a research perspective, same question that I asked to Eileen and Stacy. What are some of the the innovations based on your own work that you believe practitioners really need to carry forward?
Yes, the data give us a great set of insights into the future. No, of course, no one has a crystal ball, but the number one trend to watch would be the economy. 2021, we've seen recovery take place, broad-based recovery in the United States, maybe not so much in other parts of the world. We've also seen that as vaccines become more widely available, people are coming back to work, in-person events are returning. And so I think as the economy continues to grow, all of us in the nonprofit sector can expect that philanthropy will also continue to grow. In addition, technology will play a big role in 2021. Innovation has been sort of the source of the growth that we've seen in 2020. But the last point I'll mention that we saw in 2020, no one has talked about that yet, but the emphasis on collaboration and community. Lifting up community voices, certainly for fundraisers to know their donors, understand their donors, but also to bring community voices to the table and to understand the communities that they serve. I think equity and inclusion have been a big part of philanthropy in 2020. We seem to be at an inflection point. And so for nonprofits who are working on all kinds of issues to center on community, to lift up equity, and to think about how they can collaborate with others to achieve greater impact. I think those are trends to look at as we move into the future.
Just to add to what Una says, of course, she's right. It's the economy that we are always looking at for the purposes of Giving USA. But an important second part of that is not just what the economic factors say, but how people feel about the economy. So one of our studies that was fielded in May of 2020 told us that about half of people were already responding as of May of 2020 in some way to give back in response to the pandemic. But what we found out from the people who were not able to give or who did not give is that the number one reason by far that they did not give was uncertainty and, frankly, anxiety. And that's something that we see bear out in the larger scale data all the time. But it's also important to see that it's showing up in survey data as well. So when people feel more confident in their ability to give more, they do so. That's why we have disposable personal income as one of the measures that's closely linked to individual giving. So it's not just the economic factors, but how people are experiencing the economy. 42% of the workforce was working at home starting in about June of 2020. And for those people who are maintaining that trend, life may have continued back and gone back to a relatively some version of normal for them. And so really having that sense, or really trying to gauge that sense of who is in a new routine where they feel solid. I think that that's quite important. And then another factor is looking at the legislation that's coming through. So the American Rescue Plan We'll put another 1.84 trillion into GDP, and that's another thing that can buoy the GDP and the factors that make it conducive for people to make gifts to charity.
Really wonderful. And it's a great place to wrap our conversation. Dr. Osili, Dr. Pruitt, Eileen, Stacy, thank you so much. On behalf of all my colleagues at CCS, I just want to thank you all for your partnership, the incredible thought leadership and work that you do. I want to end by one housekeeping bit and then one word of thanks. So the recording from today's webinar and slides that you saw today will be distributed via email. I should have said that in the beginning. A lot of questions came through. People want this information, of course, and we are so happy to share it. And then my final word of thanks is, there's our timer. My final word of thanks are to all the people who are on this call, who joined us. The work that you all do for your organizations and for really some of the world's most important causes could not be more vital, could not be more appreciated. We thank you for what you do. We thank you for joining us. Everyone here on this call, from the Lilly School, the Chronicle, the Trust, and of course CCS, are here to be your partners and your resources. So thanks for joining us and have a great rest of the day.